the great work being done by the various SMEs we have in our country. And they are the focus of a discussion this morning at the graphic business Stanbic Bank breakfast meeting. Evans Mensah is already moderating. It's taking place at the Labaji Beat Hotel, and we'll take you live there.
The good people who have made this possible, listening to us wherever they are and joining us via the JoyNews channel. We're going to start with an opening prayer, ladies and gentlemen, and help me welcome Abigail from Graphic, who will open us up with a word of prayer. Ladies and gentlemen, Abigail.
Let us pray. Heavenly Father, we thank you so much for this morning. We are grateful for the gift of life, and we thank you for traveling mercies safely to this place. We have once again gathered to discuss the development of our nation. We pray for your direction. We pray for your guidance. We pray that we would have a very fruitful discussion, that at the end would give you praise. For this and many other blessings we have asked through your Son, Jesus Christ, our Lord. Amen.
Thank you, Abigail. Let's start, ladies and gentlemen. I want to invite one of the people who've been very instrumental in making this quarterly conversation possible. He is from Stanbic Bank. He is the MD of the bank. Ladies and gentlemen, with a round of applause, help me welcome Mr. Ahassan Andani.
Good morning. Good morning. Good morning. You know, when you have these joint programs, you should be interested in the program, because the chief executive of Graphic Communications Group is usually the first up, and then I copy him. But he's been monitoring the program and decided to throw me up. So on behalf of Stanbic, we want to thank Graphic Communications, Graphic Business, for making us part of this very, very important event. We want to thank Joy FM for giving us the audience in this house and out of this place. We want to thank all of you for coming. For us, SME financing, and I'm not going to take the wind out of the sail of our very distinguished panel of speakers, but just to say that SME is very, very, very critical to the development of Ghana, in fact, Africa, because we're just beginning our renaissance. There aren't too many, or one or two African global companies. Most of our companies are now starting up. And it's in our vested interest to find solutions to ensure that these SMEs find feet to stand and to help propel our economies and get us out of, you know, all the social economic problems, unemployment, and most importantly, lack of participation in the global economic arena. For us as banks, we deal with SMEs, but we know our effort is not good enough. I can say up front here, the efforts of banks is not good enough. But we do know a bit, one or two, about SMEs. And that's why for us, in our discussions with Graphic, we did say that we thought one of the critical areas to address for SMEs in Ghana in particular should be equity. How do we ensure that equity partners debt in a much balanced manner to give these SMEs, first of all, legs to grow and to run, and the banks will give them the wind in their wings to fly. So this topic is very important to us, and it would only serve to complement the efforts that banks are already making, inadequate as it is. But we're still here. For us as Stanbic Bank, we say Africa is our home, we drive her growth. And if Africa's enterprises are still small and medium, it is our vested interest to throw every resource we can at finding solutions to the financing of SMEs and the development of SMEs in our various countries. So on behalf of my colleagues, I want to thank Graphic once again, and to thank you, the audience and our speakers, for agreeing to come to generate some conversation here that should hopefully enable us take some solid recommendations to vested interests, Banks, government, development agencies are the people we are looking to begin to pull decent resources. So let's make sure that we can justify a conversation with these stakeholders at the end of this conversation. On this note, I want to say good morning and enjoy the breakfast business meeting. Thank you.
Ms. Andani, thank you very much for opening it up. I want to now also invite the MD for the Graphic Group of Companies, Mr. Atuafo, ladies and gentlemen. A big round of applause for him, to welcome us to his event.
Good morning, ladies and gentlemen. The Managing Director, Stanbic Bank, my dear friend, Standani, who I'm making a broadcaster of. Distinguished expert panel of speakers, ladies and gentlemen, welcome to this morning's deliberations. The graphic business Stanbic platform, as it's been evolving, is becoming a significant part of the graphic business's opportunity to create connections for brands, for the industry, and our entrepreneur community. As an evolving economy, some would say it's an emerging economy, others would say it's a developing economy. Whatever we want to describe ourselves as, we are in the midst of a young population that is wanting to do. You come across young entrepreneurs. Yesterday, for example, on Founders Day, I encountered a team of 3 students, young ladies in college, third-year students, who have developed a product in a simple Ghanaian and more fancy-oriented drink, ice kinky. Beautifully packaged and selling at a premium. I was actually impressed and amused seeing these young people and what it is that they are doing. And I made a joke that, for example, I'm sure at that price point of about 5 cedis, they could buy a whole input of a bag of kinky and make 30 bottles thereof. Now, how do they go forward from this endeavor? Packaging, freezing this product, and all of that come at a cost. And where do they go from here? And how do we support them to grow? It is on this basis that we have this morning gathered to look at an opportunity that helps us develop what Mr. Andani was speaking to, an equity fund that enables us to drive growth in SMEs. Any business starts small. What is required is the structure, the discipline, and the purpose in an enabling environment backed by the required financial support to get it to grow and to develop. I would think that at this forum this morning, we have an amazing opportunity listening to experts drawn from a wide spectrum of industry, of finance, of manufacturing, to lead us on that path that we want to get to. As a nation, we are currently on the verge of an amazing policy initiative aimed at transforming the base of our industrialization. In this government's policy mandate, the one district, one factory. How do we go from that place? And what it is will be the benefit of helping our SMEs to develop. I believe that an SME is an environment or an ecosystem that offers us an opportunity to test and prove ideas, to get them to a place where they can be pushed and supported to grow. They also offer us an opportunity to recruit young people into work and help them to develop a culture of work and a work ethic. Managing a business is not an easy task, and growing an enterprise doesn't come easy. It requires a certain degree of discipline, structure, and focus that would also now allow you to draw the necessary funding that makes it possible. Sometimes people start off and say, I want to start a business, but they lack structure, they lack purpose, they lack focus, and the discipline to make it happen. So they go to a financial institution to source for the requisite funds, and they probably do not even have the documentation that sets this on a reasonable path. So you ask fundamental questions, and as we've been experiencing with some of our partners in some of these engagements, and they can't provide that. I believe that in the course of these deliberations, we'll get to understand what is required to make this possible, practical ideas that would enable us filter reasonable solutions that would help drive growth and development in our SMEs as they evolve. And it is these opportunities that the graphic business and all the graphic brands would continue to drive. We want to create connections that enable us to promote ideas beyond just script or video or online. And I entreat you to pay particular attention to some of the initiatives that we've been pushing in the business in the past few years and what is yet to come. In September, coming up, we'll be launching a reimagined Graphic News Plus, which is our digital interface that will help us connect premium content and other story verticals to our audience segments across the country and around the globe. As we are aware, media is moving beyond the traditional verticals. We're being disrupted at significant levels, and we've already begun behaving as entrepreneurs and as a small business to disrupt ourselves starting. So look out for that, and I'm sure you'll be very excited and impressed with what it is that we do. It's credible, it's authentic, it's factual, it's relevant, and you'll get value from that opportunity and that engagement that we provide. Finally, I want to say thank you very much for coming, for taking this opportunity to join us. I believe that at the end of these deliberations, we would come up with ideas, practical, relevant, and practical ideas that enable us to move this conversation forward. Mr. Andani has spoken as a banker. The experts in policy, in manufacturing, in financial analysis and advice will come and tell us what it is that we need to do. And I believe that those of us in the audience who are actually at the coalface of business, of evolving enterprises, would help us come to that place and do well on this meeting. On that note, thank you very much and welcome once again to the Graphic Business Stanbic Breakfast Meeting. Have a good session.
Ladies and gentlemen, Atwafo, a big round of applause for him, please. We're now going to go into our conversation, and I must just acknowledge our sponsors once more. We are live on the JoyNews channel on Multi-TV, and if you are watching us on your DSTV, is channel 421. We are going to be live shortly on Joy 99.7 FM. We are obviously live on myjoyonline.com. And we are also streaming at Daily Graphic Ghana. Tweet at us at Graphic, and we'll be grateful to hear from you. We'll be sharing some of your views shortly. Stanbic Bank has made this possible together with Graphic Business and Joy Business. So thank you also to Labadi Beach Hotel. Ladies and gentlemen, I want to now welcome my panelists who will be helping us dissect this subject in greater depth, building a national equity fund to support SMEs. First on the list, and I will invite him to take his seat here, is Edward Gomado, who is the partner and director of PwC. Ladies and gentlemen, please, a round of applause to Edward. I also want to invite to join me and take his seat up here, Norma Eshon Famia, who is General Manager, Group Operations, Kina Group. Ladies and gentlemen, a big round of applause for him as well. Also joining us is Professor Bole, who is a Dean, UGBS. Oh, there's a change, okay, good. And so yes, you represented him. Oh, fantastic. And another dog from the University of Ghana Business School is joining us. Please, I don't want to get the name wrong, so I want you to make your way up here. We'll do the honor shortly in full. Please, a round of applause for him. And that's Dr. Lord Mensah, and look at that. I've hosted him on my show a few times, and I simply escaped me. But definitely good panelists to have on the show. Dr. Lord Mensah from the University of Ghana Business School. Also joining us is Mr. Marta Theo, who is a consultant with the International Finance Corporation. A round of applause for him, ladies and gentlemen. And I will start with the first panel presentation. They're going to have 5 minutes each to lay out their primary argument for building a national equity fund, and then sort of scope the areas. After which, we'll go into a conversation right on this side, and then I'll invite you to join in when the time comes for you to join in, because I'm sure there are a lot of questions that you want to ask, and I'll invite you to do so very shortly. I will start with you, Mr. Nyama Eshon Famia. And are you comfortable making a presentation there, or you want to do it here? Good, fantastic. So yes, Mr. Nyama Famia will start with 5 minutes. Just lay out your general thoughts about the subject, and I'll take 5 minutes from everybody as well before we go into the main conversation. So, Mr. Famia, your 5 minutes.
5 minutes sounds a bit like too much, if you ask me. Good morning, ladies and gentlemen. I do not have too much to say for starters, except that I'm sure the conversation will develop as we go. I have wondered over time why we are where we are, but that seems to be the situation with a lot of other things, not just with SMEs. I have lived the last 20 years working in SME, particularly in manufacturing, making and selling stuff across West Africa. The first thing we might have to clear up is the very definition of the word SME. What is small and medium differs from country to country, it seems like it. The Americans seem to say that a company must have at least 500 employees to be an SME. In Europe, that comes down to like 250, 200, depending on which country you are coming from. The definition is usually a combination of either number of staff or turnover, or a combination of the two. In Ghana, my own chamber's working definition seems to be something like 15 persons. If you employ at least 15 people, and you have a turnover of at least 250,000 Ghana cedis per annum, that makes you an SME in Ghana. I'm yet to know whether that is small or medium, but either way, it still qualifies. The argument about the financing of SMEs does not seek to give the impression that the only critical success factor to growth in SMEs is finance. Of course, nobody will downgrade the value of things like discipline, of how serious you are, of your personal knowledge as the entrepreneur, of how dedicated, of your strategy, and many other things. But financing in this country for small and medium-scale companies is a big problem. What has been the current financing models, one would ask? It usually, the entrepreneurs own money, and then you get to family and friends when you have run out of your own money, and then you might have to end up calling on somebody like Mr. Andani His model usually comes with a collateral. These have been the usual sources of SME financing to date. But we would have to cast the net wider. I believe that's the reason why he himself supports an event like this. He believes that more patient funding is required for startups. My West African experience tells me that as much as we think we are a fantastic location and destination, there may be others who have an up on us. I will take Nigeria as an example because I know it pretty well. For starters, you will take a commercial loan for anything between 15 to 18%. In this country, it will be anything from the lower end of the Nigerian interest. We think we have energy on our side, but fuel costs nothing in Nigeria. A liter of fuel in Nigeria is only 140 naira. A gallon, therefore, works to less than $2. You are therefore buying petrol in this country at 3 times or 2.5 times what you buy it in Nigeria. The market is against you hereabouts. You can bring anything from anywhere to sell in Ghana. In Nigeria, if you made something in that country, chances are, if it's a fast-moving consumer product, what we used to call essential commodities, nobody else can bring it from outside. Your competition will be all local. That is not the same here. Even water is shipped from thousands of miles into this country. So really, once you add finance, the cost of energy, the cost of utilities, the cost of even real estate, the rents we pay, it makes it not a very attractive destination in West Africa even. A subtopic of this meeting had been making Ghana globally competitive for the SME market. I want to say, let's start by making it regionally competitive before we get to globally. And then when we put things side by side, we realize that we are at a great disadvantage and we have a lot of work to do. What is the way forward? There may be various alternatives we must employ. I have seen the alternative index on the Ghana Stock Exchange. Even the so-called big companies on the stock exchange seem to be struggling to get people to invest in. It makes it, therefore, even more complicated for companies that nobody knows to get people to buy into. I therefore think that for starters, before you are listed on the alternative index on the Ghana Stock Exchange, there is at least a year's period of targeted marketing and selling of the company to the public so people are interested in investing in companies other than the big ones. That way, SMCs, once they are listed, have already been marketed to targeted individuals and organizations, and they can expect that they would get takers. I think that another thing is to make sure this country is genuinely a lot more attractive than it is. The Swiss have made a country out of just keeping people's money for them. That's all they do for a living. We have prided ourselves on being friendly people. We have prided ourselves on being a safe country. But even that we seem to be losing. It doesn't make us too attractive anymore. When I started going into Nigeria 10 years ago, some of the most famous products in every corner shop were Ghanaian. In those days, you could find village fresh alatasemina everywhere in Nigeria. You could find Starkist tuna everywhere in Nigeria. You could find ahumka ginger everywhere in Nigeria. You could find Nkatie burger everywhere in Nigeria. These were the days before Alomo and Healthy Life hit the streets of Lagos. Today, I don't see any of those trailblazers. One major reason why they don't seem to exist anymore has been the cost of finance in this country. Because if you have to borrow at 30%, if you have to buy fuel at the price we buy at, if you have to pay rents at what we pay, it becomes almost impossible to produce anything here and go and sell it somewhere else. Especially since if you make anything of substantial quantity in this country, you can't sell it here. First of all, there are not enough people here. Secondly, everybody brings his stuff to come and sell here. Thirdly, if you have to take it anywhere else, people are producing there for less. So I believe we need a more attractive environment. All these add up to the cost of finance, if you ask me. We need a lot more, a broader scheme of doing interest subsidies in this country. There's a choose and pick, come this party and that party. And it never seems to go beyond approvals by the time a party leaves office. You get an approval, you never see money. You chase and chase and chase, and the interest subsidies never happen. The government goes out of power, and that scheme is supposed to have ended, and you wait for a new government to start a new scheme. I believe SMEs need discounted environments to operate in. I do not think that you can start a company and pay the same electricity tariffs that a Club 100 company pays. I do not think you should be subjected to the same GRA audit and constant visits from IRS that a Club 100 company does. I do not think that just by adopting ECOWAS policies, we are ensuring that those policies are practiced across the sub-region. I believe all these will help SMEs grow and thrive in the region and subsequently later on globally. Thank you.
Very, very interesting thoughts there and a good way to start the conversation. I want to bring in Mr. Matthew, the consultant, International Finance Corporation. I'm just from what Mr. Famia had said, it seemed to me that, and you mentioned Ahomka ginger and, you know, all those Starcase tuna, we remember the commercials, and it just struck me that, yeah, it's true. They sort of faded away into oblivion. Isn't it the case of the market forces that's deciding who survives in Ghana? That's what it's supposed to be. At least we pretend to be a capitalist economy, and so that is what must happen. And therefore, if you're a small, medium-scale enterprise, and you die, as is quite illustrated, it just simply means that you're not good enough to survive, because money will go where it feels, you know, it can have sustainable returns. And maybe that's what it is in Ghana. What's your own experience and your thoughts on this subject, knowing the problem that he's quite adequately illustrated?
Thank you very much. Money will go where it makes money. And so perhaps he's really opened up the story a bit and talked about all the other issues that impact on an SME or on a company to survive. I think going forward, all the suggestions he's made make sense. We need to fine-tune or intervene in the market on the non-financial side in order for the financial side to make sense, which means that, for example, space, cost of industrial space and so on, there must be some work there where people now have access to an environment where they can deliver on in a competitive way, where a subsidy can be focused at that site and it's managed and it's controlled. So there are a number of non-financial things that need to be done as a prerequisite for success.
So we aim to set the prerequisites. I want to come back to something he started with, defining what an SME is.
Very good.
I think it's a basic fundamental point. Do we have a consensus on what that is?
Well, look, for the discussion to go on, a number of things need to be defined or clarified for the purposes of a constructive conversation. So yes, SME, who is an SME or what is an SME, we need to talk about it. And for some reason, Ghana hasn't yet really defined one. There are various schools of thoughts, there are various agencies with that. But I would like to borrow what he said, that one of the, we can adopt looking at revenues and number of people employed as a ready reckoner for the purposes of this discussion to go forward. So yes, SMEs need to be defined. And as the name says, SME means small and medium. So there's a certain distinction from micro enterprises. And I would like to go ahead and discuss small and medium without talking about micros. So small and medium, in my working experience, would look at maximum staff up to about 30 people, and medium maximum staff up to about 100 people. Management becomes very, very competitive, and Ghanaians have major problems handling it, management at that level. The other side of it is the revenues. So we also need to establish some basic thresholds so that we can be seen to be pulling in the same direction. So these are things that we must clearly define. I think I need to also talk about the financing side. Ghana has more or less moved along a linear way of financing. First, we did loans, and we are doing loans. And then we thought of leasing, and then we've tried equity funding in a number of ways, the alternative stock exchange, and also from venture capital companies, and so on. I think going forward, we need to understand that we need to have a cocktail. All these things are relevant, but they all need to be present and active on day one. There's no merit in sequencing it, that sometimes we do loans and we wait, and when that doesn't work, we do leases and we wait, and so on. They all feed off each other, and a small company or a company that hasn't got so much reserves probably needs to have these on hand. So you are talking about different kinds of funding, different types of funding, but they are all useful to that SME for different reasons, and they must all be present. I'd like to go forward to talk about this topic.
Please go.
We need to clarify what we mean when you say National Equity Fund. So we need to, more or less, and my own take is that it involves, let's say, the territory of Ghana. And national should also mean that a lot of entities have opportunity to invest in such a fund. By this, I mean maybe government would be an initiator, but it should be used only to attract others who would not normally be interested to invest in the sector, to also pay attention and come forward. And then certainly the private sector should also find it of interest to invest in that private sector. So I can imagine that when we say a national thing, it's a very large group of investors. And the reason why I'm...
Led by government?
Not initiated by government. But not necessarily managed by government or controlled by government. Once you initiate and create the environment, government's job really is to improve the environment for investment. So that is why I brought them up. So then you have this mix, and it is broad enough so that no one particular individual or group are controlling it. What we are saying is that it should be an independent fund, and what it invests in should be defined by the fund itself, not by a third party. I also think that for such a fund to work, you need another fund. And here you are talking about a technical assistance fund, which supports and develops the market in which this fund, the equity fund, would like to invest in. This is normal for business, that your market must be clearly defined and you must develop it. So in the same way, you want to take the SMEs who are the market for this fund, they must be developed. And here I suggest that you have a technical assistance fund, which is money. Sometimes if you use the word grant, it's misconstrued, but money which can pay for professionals to help a startup company or a young company to be well organized and will be attractive for an equity fund to invest in. Attractive means that here is a small company that if you put your money in it, over time, there will be good financial returns worth your while. And the measure for worth your while is also something which will be defined. And you will have to set up thresholds and hurdle rates where the small company must perform to that level. So with these kind of clarifications, what is a national fund and who owns it, and the character of it, it must be independent. Then there's also the market side of it, which must be developed. And that is where the technical assistance fund would work. Having said that, there are other elements which need to be considered. And perhaps how much money would an investee company be able to raise from a fund? That discussion must go on, and it's linked to the size. What do we mean by small and medium enterprise? So you are not talking about $50,000, for example. Neither are you talking about 50,000 cedis. You are talking about something more meaningful, which can help a company who has worked hard to look as if it's going somewhere. And there are key elements.
So you must already have a track record.
You must establish a track record. There must be something to be evaluated. And that track record is something that must be evaluated in a dispassionate way. So it's embodied in the vision of that company. It's embodied in the records of that company. It's embodied in the market exploitation capacity of that company. And all these things must be measurable, and it must be seen. So on day one, a small company may not have all these things. That's why I suggested the technical assistance. Now, a market is always dynamic. And so you also need as a backup, a technical advisory group which is involved or focuses at identifying market trends and advising the fund that, look, you need to adjust and take advantage of X trend in this side of the market or in that side. So it's possible that, for example, the example that we have lost competitiveness becomes an issue and we are no longer in the Nigerian market. This must become the focus of some investigation. And you need some money to do that. So there are a number of funds that would make a national equity fund effective and successful.
I want to bring in Dr. Lord Mensah. Doc, just before you go into the feasibility of building a national equity fund to support SMEs, I think this conversation is based on the assumption that SMEs are central and key to our economic growth and that they contribute a lot to us. But just for the avoidance of doubt, I want you to illustrate for me why SMEs are important for this economy. I mean, how much do they contribute to our GDP, for example, and why should we be worrying ourselves about funding them?
Right. Evans, SMEs by size, it might not be huge for you to say that SME, one particular SME, in terms of its revenue, in terms of funds that they control, are huge. But then you can look at it in terms of cumulative, how they come together, and the package or the percentage they contribute to this economy. I think PwC has a report on that, and it clearly tells you that SMEs contribute about 70%, and above of our GDP, which is clearly gives you the signal that indeed we need, a fund to support.
So they contribute 70% to our GDP?
And above, yes.
I mean, in spite of all the problems that Mr. Famia points out?
Yes.
Amazing.
I mean, yes, it's clear. I mean, we have a report of that sort from Price Waterhouse. Now, the question would be, do we really need this, equity fund, purposely for funding SMEs? SMEs, my earlier presenters have clearly indicated that their source of finance most of the time will be on loans. Apart from that, they're doing their own equity funding. People have their own funds in there. In itself is equity funding. But the question is, to what limit can they fund? So you realize that the business in itself will be sitting on shelves because they are quite limited in terms of fund accessibility. And of course, in an environment where funding is geared towards, the formal sector, it will be difficult as an SME to attract funds. Now, let's, bring it back to the topic under discussion as we see, building a national equity fund. Now, the question is, who will own this fund? And of course, the ownership will come from, those who contribute into the fund. So if the contribution structure is tilted towards government, you should expect that government will take the pace. If the contribution structure is tilted towards, the private sector, you should, clearly understand. I'm talking about financing, contributing into the fund. So obviously, the private man will have a bigger interest in there and will make sure that everything is the perfection to the latter. Now, I foresee a national equity fund where the distribution in terms of contributing into the fund is well distributed, not concentrated among few entities, few hands. When it happens like that, you're going to see key interest from diverse people. And in the end, the fund should be able to, stand by itself. Now, with this National Equity Fund, if you ask me whether it should be a fund that can even be traded on our exchange, so it could be the stock exchange, or it could be the Ghana alternative, market, where we can easily assess the performance. Because this, if you ask me my proposal on this fund, I will tell you that it should be a fund that is recurrent. It shouldn't be a fund that people contribute or investors contribute and it's closed. And the fund will be sitting by itself. And sometimes those contributions don't come. And you know how sensitive SME businesses are. If you're not getting contribution and then the performance from the SME side or those who derive the benefit from the fund is not forthcoming, trust me, the fund can go down. So the fund needs to be sustainable. And one of the ways to ensure that it becomes a sustainable fund is possibly to list on the exchange, so that information on the fund will every time be clear. You know the price at each point in time, because we have exchange-traded funds, where the fund itself becomes a commodity. People can invest in it at any point in time. depending on how it is performing competitively on other, market listed on the exchange. And of course, because it is listed on the exchange, it's long-term financing. And that is what the SME needs. SME doesn't need short-term financing.
How short is short-term? How short is short-term?
I'm looking at 5 years and above, long-term.
So your long-term is 5 years and above?
Yes. Okay. So effectively, we can have, an exchange-traded fund coming out of this, national equity fund. And like I said, ownership is not supposed to be concentrated. And then also, once it is listed, we need to look at the distribution of the fund. And of course, I've talked about the structure in terms of contribution. If you leave it completely concentrated or tilted to the government side, distribution becomes a problem. If you don't take care, funds will end up in hands that will not be productive. If you don't take care, funds will end up in sectors that might not necessarily be productive. So efficiency becomes a problem. So you have very good input, output nil. So in the end, it will affect the fund in the long term. That is why I was proposing that we can have, it's a brilliant idea to have national equity fund. But as to how we distribute the inflows, those who are contributing into the fund, is very, very important.
So what would you propose we do in terms of the balancing control? Should it tilt towards private sector?
I see it to be more, it should be more private sector oriented.
Okay, but leave room for government contribution as well.
Exactly. The government can contribute, just to steer the affairs of policies, to make sure that you provide the groundwork, to make sure that, funds flows to sectors that will enhance government policies as well. But it shouldn't be so much of a control.
I mean, I'm thinking about in a country where politics is a devil, really. I mean, when public-private partnership is what you're proposing.
Yeah,
it doesn't always.
Somebody would tell me PPP has never worked in Ghana.
Exactly
right?
my point I was going to make to you. So when the private sector knows
partnership funding, it's not PPP. It's partnership funding. So effectively, the partners fund, and then looking at the private man's interest. Okay. The private man will ensure that wherever the money is going, there's benefit. Other than that, the private man won't bring his money in there.
Okay.
So effectively, we should encourage a fund that is tilted towards the private sector. And of course, it's still a national fund because it is serving the interest of Ghana.
Okay, very interesting thoughts. I mean, I'm just curious, I'll come back whether we can just have an all private sector led fund, but initiated by government. Right. I mean, without government actually having money, maybe through policy, through law, whatever it is, and then allows private sector to run it. I mean, let me bring in my friend from the PwC. You've done the research on this. You've heard the conversations. Where do you sit on, first, the need for this fund, how it will function, and the modalities to make it work?
Thank you very much, and greetings to Ghana. Thanks to Graphic Business and Stanbic Bank for the invitation.
You can move it closer to you.
Closer to me.
Great.
Thank you. Good. So I think the SME business in Ghana has made a very strong case for itself. It is believed that about 92% of businesses in Ghana are in the SME sector. Again, it is believed that the SME contributes about 70% of Ghana's GDP and employ some over 85% of people in the manufacturing sector. Clearly, any support to the SME is a direct boost to our GDP as a country. Now, without overemphasizing this point, I just want to give you a very simple example of a company that was formed some 10 years ago called Uber. This company, as at 2018, has a total revenue of about, in Ghana terms, 59 million Ghana cedis a year. And that is comparable to the annual revenue budget for Ghana in 2019.
I mean, you mean billion or
Sorry?
million? I heard you say million. You meant billion.
I mean billion.
Billion.
Yeah.
59 billion.
59 billion cedis. Okay. So if one country is generating enough revenue the size of one company, Can you imagine if we had that company in Ghana, what it would have done to our economy? So clearly, we are saying that the case for SMEs is strong. It's even stronger by the fact that we've signed on to the Africa Free Trade. Now, Africa Free Trade is not only an opportunity for Ghana, it's also an opportunity for companies in other countries. Whilst we are looking to send our goods and services across border, they are also looking to come in to us. So how ready are we to be able to equip our companies to be able to reach out there and compete? Okay. Now, it is critical that as a country, we look at how do we position our SMEs to be able to compete. But remember, if we are asking our companies, SMEs, to go out there and sell, question is, competition would always come in terms of quality and pricing. Now, if we're talking about quality, yes, we know what Ghanaian businesses are doing. We are happy about that. But how much is it costing Ghanaian businesses to produce what they produce? And if they send it out of Ghana, how competitive is that going to be? That is where I leverage on my brother's presentation, that look, as a country, can we do an analysis to find out what are the major costs for SMEs in doing business? And then how can we support them to become competitive? He mentioned the area of electricity cost. Now, if we want to be competitive as a country, and we believe that, look, cost of power is such a significant cost for our SMEs, remember, if we are able to help them contain that cost, their unit cost of production therefore reduces, and they will be able to compete effectively against other entities. Now, the opening of Africa for us gives us a wider economy. Now, if you're looking at the feasibility of setting up a national fund, I look at it in three broad categories. One, the size of the economy, how diversified it is, and then six-packing. I don't mean the belly six-pack, but I'll explain that very quickly. So looking at the size of the economy, once we have signed on to the Free Africa Trade, that opens up Ghana hugely for us. Fortunately, Ghana is known to be very peaceful, a safe haven for capital. So again, we can become the hub for Africa in driving that initiative. How do we then position ourselves to be able to leverage this market size? Africa put together probably is larger than the largest population in the world, which is China. So the advantages China has now been brought to us. And the thing with a larger economy is a benefit we call economies of scale. Principally, if you are producing as a company, you would have variable costs, and then you would have fixed costs. Fixed cost is fixed irrespective of the volumes you're producing. So what we're saying is that if you have a fixed cost, and you can share that amongst 1.3 billion people, your fixed cost per unit becomes negligible, as opposed to if you are sharing that amongst 30,000. Let me make it very simple for all of us to follow. Assuming you set up a garage to service cars. If a car counts for servicing, your cost of replacing the filter and the oil is a variable cost, because the more cars you service, you would need to change oil and filter. However, the cost of your garage space is fixed. So whether one car comes or 10 cars come, if you are paying 1,000 for the garage space, it's 1,000. Now, the argument is this: if you have only one car patronizing your service for the month, you're going to have that variable cost plus a fixed cost of 1,000 for that car. However, if you service 1,000 cars, you would have those 1,000 cars sharing the fixed cost of 1,000. So the unit cost to you becomes 1 cedi. The advantage China has is they can get 1.3 billion people sharing that fixed cost. So to them, that fixed cost is negligible, 0.00000. So therefore, they can afford to bring their products to you at variable cost. You who do not have the numbers would need to take variable cost, add your fixed cost element, add your profit in order to be able to compete. And at that level, you would not be able to compete. So that is where the opening up of our economy then allows us to be able to reduce our costs and compete globally. That is the bit on the size of the economy. Then, of course, Ghana has a very diversified economy. We have mining support services, oil and gas, we have agriculture, waste, a lot of this. Now, the more diversified your portfolio mix is, the better for you, such that if any of the industries are in crisis, you can still leverage on other areas. Now, the sixth part I was talking about has to do with what we call governance, transparency, our legal systems, taxation, etc. Now, these are agents for building trust for any venture capitalist. If I want to bring my money into a country, how safe is the country? How reliable are the economic policies of the country that I'm not going to lose my capital? Okay. Now, when we talk about legal systems, if there are issues in businesses, if the funders have issues, where do we go for redress? Can we trust that we would have fair judgment if we take our issues and quick enough to be able to continue business? So if these ingredients are there, I can trust the system. Then also we talk about taxation. Now, how transparent is your tax policies? Is practice consistent with your laws? Or do you have instances where practice is at variance with what you have done? Remember, this is important to any investor because as you are planning, you are making projections. Now, if you make projections based on certain factors and reality is different from those projections, then where do you go from there as a business person? In summary, an exit strategy also is very critical in determining the feasibility of setting up a national equity fund. Exit strategy means that an equity fund would not be interested in staying in business with you forever. At a point they would want to exit. Are there avenues available for venture capitalists to be able to exit if they want to? And we are saying that yes, avenues such as the mergers and acquisitions are helpful. You could have situations of mezzanine loan where they come and buy out your stake. You could also have a first right for the persons or company you are partnering with to buy back the share that you have invested in them. Critical also is the existence of the stock exchange. Assuming I'm not able to find any secondary buyouts, the ability to be able to list the company and then get myself out of it is critical. Aside the stock exchange, we also have the Ghana Alternative Markets, which helps you to be able to get this. So all these ingredients, for me, holistically, sets the pace that indeed it is feasible to set up such a fund in Ghana, and it's an opportunity we need to take to be able to leverage the opening up of Africa. We need to get to that point where we are growing our businesses geographically, and that we need to take advantage of. In terms of the implementation, as you asked, yes, there are a number of things. I like what Mr. Amatefu has said, that we need to look at it as government-led, not necessarily government-controlled. Now, this initiative is laudable, and from conversations with foreign direct investors, if it is well-structured, if it is well-organized, this is something they would be interested in supporting and putting their monies into. But we also need to be careful not to be drawn into politicization of this initiative or the over-politicization of the initiative. We need to look at it more from a merit-based system where we are supporting based on what you are bringing to the table, not based on who you know or not based on what your party coloration is. We want to support best ideas. We want to support best businesses because as a country, we want to put our best foot forward and ensure that we get mileage out of this opportunity.
Mr. Fami, I want to bring you in on this, and I'll soon come to my audience. And as you've been speaking, something that struck me, that there's a consensus that we need to set up the fund. And it's almost an assumption that investors, once government leads the way and this fund is set up, investors will be interested. But are we not, isn't an assumption a bit far-fetched? Will it be really attractive to investors to put money in, knowing the problem you stated? The frequency with which SMEs collapse in Ghana is alarming. I mean, you can look at it. I mean, SME's lifespan of an SME in Ghana is what? I mean, I don't know what the research says. An average lifespan of an SME in Ghana is what? I mean, PWC, have you done any research on that?
Well, generally, the statistics is saying that about 30% of SMEs collapse in the first 2 years of operation.
Here we go.
And then by the 5th year, 50%, it rises to 50%. And by 10 years, it goes up to 66%.
That's the story.
But I think the important issue is getting to know why this happens.
Yes.
Knowing the why is the critical aspect.
And I think you've touched on some of the whys.
Yes.
You want to bullet them for me quickly?
Let me touch on some. So some of this could be the result of funding. Funding being access to funds or the cost of funding. Remember, if I need amount of money to get the business going and I do not get it, and my competitors do, they knock me out. Okay, that is access. How quickly would I get it is critical. How much do I have to pay for it? Now, in terms of even how much to pay for it is where it gets crazier, where companies are lending, banks are lending at 29, 28%.
I'm sorry I need to come in there because I wanted to bring from here, but you've touched on a very, so for you, the number one reason why the chunk, 60%, sort of phase out over that period.
Okay, so let me leave them. So it's funding, it is financial management, and it is cash management.
Okay. Mr. Fami, my point I was driving at is, if you look at the statistics you just told us about, which investor will be happy to put his money in there, knowing that over time, all these businesses, SMEs, is going to put his money in, will not be there and may probably collapse, and the money will probably be a challenge to recoup. And again, the other question I want to ask in addition to that is a chicken and egg situation, right? I mean, because we say that the reason why they collapse fundamentally is because lack of the availability, access to funding, right? But the reason why the funds isn't available is also because of other factors.
Yes.
Right? And you mentioned some of them.
Yes.
The environment isn't good. Yes. It's expensive. If I have my money, I'll put a lot of premium and interest on that because I know the environment isn't encouraging. So if you look at that cycle, will it really be feasible and attractive to investors if we set it up? And how do you make it attractive?
You make a good point. Precisely the reason why I said a number of things. One is that getting access to funds is one thing. What is the cost of the money? How quickly will I get it? When you run a business, it is difficult to continue to run, even if you were going to get concessionary interest, if it would take months and months of red tape to get it. By the time you got it, even if it's at 5%, you would have gone under. A lot of people in this country, by the time the facility, they get to draw down, the business is already out of the market. That's number one. Number two is that a number of things have to change in the environment, especially for SMEs to become viable. Otherwise, like you were saying, even if there was a fund, you would not get inflows into the funds.
Or inflows will come at a very high cost. Same problem
which still exists anyway. Exactly, I mean, it's not as if you wanted money from a commercial bank and you were a viable enough business, you wouldn't get it. But you'd be getting it at what price? And if you added on your other cost, will it make it worth your while? Or even if you could continue to survive, would you ever grow? How big are the businesses in this country? We should ask ourselves. Even the businesses that have stood the test of time, what are the margins of profit they make? How much of their margins actually converted to cash that they get to put in the bank? A lot of businesses in this country make profits only on paper and make money they never are able to get out of the market. That's another thing.
Lord Mensah, your thoughts on this?
Yeah, I think the essence of having a fund in itself is a risk-sharing mechanism. You know, the investor who is providing his money into this fund knows very well that this is not one SME. that if it's 5 years' time, if it collapses, that's it. But this is a fund that will be targeting different SMEs, possibly different sectors. And if the fund is well managed, diversification will be key. And so if one sector is not performing, the other sector obviously might pick up. So in the end, if you start with maybe 100 SMEs and you get about 50 of them, climbing beyond, 10 years, you still have part of the, fund, and your contribution will yield for you. And trust me, SMEs that survives, right, beyond 10 years, the returns are very, very enormous. And so I believe that contributing to this fund in itself gives the investor some cushioning, rather than just allowing the SME to go to the bank by itself, to look for the fund. Obviously, the bank sees the risk as what? One SME. If you're not able to manage well, that's it. What happens to my money? So effectively, the essence of, having the national fund is more or less giving some cushioning to potential investors who wants to invest in SMEs.
Mr. Matthew, how do you make the fund attractive if we set it up?
Well, a lot has been said, and it's correct. Let's focus on this element of competitiveness. A fund must make money. An investor's fund must also make money. So if the National Equity Fund doesn't look as if it will make money, then it doesn't work. So
can an equity fund make money in Ghana with this current environment?
With this current environment, well, we've been told that we are not competitive as a nation. So that's where you need to do some work. The word competitiveness must run through the whole discussion. If the fund will be attractive, then the returns compared to other investment opportunities must make sense to the investor. So we take ourselves out of the financing box again and look at the environment in which we work. And we need to work at making Ghana far more competitive than it is. You need to look at the bureaucracy, you need to look at the laws, you need to look at the pricing for different things. And so we need a fundamental look at our own country. Then on the market side, the SMEs within themselves must be competitive. So a lot of what has happened and why people think SMEs are a high-risk sector is that they are very informal. Many of them do not have that much transparency, so you cannot evaluate the company comfortably. You cannot understand how they make the money or if they make money at all. So informality is a key issue when it comes to trying to establish whether a company is competitive. So there are all these issues, but focus on competitiveness. You need to work at creating companies who will live on longer than the statistics we've had, and means they must sell. They must be able to service the, so the other issues, the research of the environment, as PwC does, is important. Now, if you cannot improve the competitiveness of the environment, then the fund itself is also at risk.
Yeah.
Now, if you cannot intervene in this question of informality and transparency, good corporate governance, and firm management control for the market side of it, that's the SMEs, then you also endanger the funds. And my colleague, the lecturer, said, it's a risk-sharing activity that's going on. So banks would make more money if there were SMEs who had strong investment profiles. So now they can lend some more. Everybody will feed off each other. So the competitiveness issue is probably the issue that runs through the entire discussion. And so it is something that we need to look at government, the private sector, the private sector advocacy groups, and then the private entrepreneurs themselves, how they turn their companies into competitive, easily measured companies, where an investor would be able to look at your company and come to understand the company the way you understand it, and then is willing and able to put his money in. That is how a national equity fund is likely to be successful, if we can address the issue of competition and competitiveness.
A very interesting thoughts. I want to bring in my audience, and may I ask that the microphones go around. If you have a question or contribution, please raise your hands, and then you can ask the question or make the contribution. Very interesting conversation. And I see a hand already up in front. I'll take that. And one of the key things I also want us to talk about briefly is the opportunities and challenges that the contender free trade area proposes. And PwC just touched on that. But I'm curious whether it's actually good for us, because if we are not competitive, I think we all agree our businesses aren't competitive, and we sign up. We've already signed up to it already, and we expect Nigeria, for example, we are hosting the Secretariat, to make it even more a more strong point. I wonder if the state of our economy right now, the way we are so not competitive, and the structure that we have for our economy, whether SMEs will survive in the face of the contender free trade. And I guess that makes the point even more for us to have the National Equity Fund. But then all these things we've said must happen before the fund must be established. It's long-term stuff. But we've already signed up to this free trade already. I mean, how do we juggle that in the face of the challenges we are facing for the SME in Ghana, knowing that all these continents on the continent can now bring because there's free trade? Dr. Lord Mensah, you want to tackle that for me?
I mean, I think for me, my position on this trade agreement sometimes is completely different from the norm. You go into an agreement when you know very well what you can put on the table. Now, clearly, none of the agreement we've had so far in terms of trade has put us on an advantage. The question I always ask myself is, okay, fine, we go into an agreement with another country, with different kind of regional agreement. In-house in Ghana, have we saturated our market with our product?
No. Our products are on a market is saturated by foreign products.
Yes, of course. Have we, really produced something that we say this product has, attained a level where we need to extend, our operations beyond borders? Then I can say that if I'm a leader of this country, I'll go into an agreement. But then, if you look at, for instance, China in their earlier years of industrialization were not part of any international trade agreement.
Because
Why?
we're building
Because they were building in-house, trying to make sure that the product. So those days in China, piracy wasn't a problem. They could have pirated anything at all. But then in the end, when they got to a point where they assume a certain level of production, they started going into this international trade. And it's to their advantage. So for me, if you ask me whether we are ready, to get any advantage from those trade agreements, I will tell you no. And like what we've been discussing here, competitively, in-house, what are we doing?
Mr. Hamia, you've been doing business on the continent and the sub-region for a while. What's your verdict on this?
I don't think it's complicated. What is lacking is a genuine will to better the lives of our people. In the Nigerian market, they have something they call import prohibition. It is something that comes out of what they call the Nigerian Association of Manufacturers. The equivalent here is the AGI, where on an annual or biannual, I could be wrong, basis, they engage the government and put forward a list of products that they think they have enough internal capacity and therefore will not permit external inflows. So if you went on the shopping, you went through a major supermarket in Lagos or Abuja or Kano, you will find that a majority of the products on the shelves are Nigerian made, because a lot of 90% of everyday products used in Nigeria are under import prohibition. You cannot bring them from anywhere. The exception is from another ECOWAS country. And even then, you will need a waiver after your ECOWAS permit. We flip it here.
Yeah.
So if you have an international brand, I cannot mention names here, and you wanted it on the Nigerian market, and it's on import prohibition, you have only one option: to go to a Nigerian manufacturer and ask him to make it for you.
Locally?
Yes.
That's FDI. Or you set it up yourself there and produce it from Nigeria?
Or you go and set up in the country. And that is how they have grown local industry. Here, you can bring anything.
You know what this tells me, and I'll come to my audience shortly, that the National Equity Fund must be one plank in the whole, structure of things we need to do, so that for the SME to succeed after he's taken money from the fund, all the things you're saying, policy must kick in. Because if he's competing unfavorably with everybody else coming from elsewhere, he's more likely to fail. The fund is more likely to suffer, and the rate of businesses falling out after a period of time is very high. And so if you're going to set up the fund, I think it's then, from what I've heard, one thing I'm getting is that it must be part of a broader national policy change across the board. Because other than that, the cycle will continue. Even if you set up a fund, it will be attractive eventually. It will be very expensive. It will be short-term. It will be long-term enough. All the challenge that the banks are posing will come up again. Let me take a question or a comment from my audience. Your name, please, and then you could.
Eric Amponsah-Boateng.
Yes, sir.
I am a tax consultant. And my major issue is we have a tax policy unit with the Ministry of Finance. In Ghana, the moment you set up a business, either small or medium, GRA is the first institution that will come at you. If it's a small business, they're going to give you a provisional assessment. And the law mentions that if you want to raise an objection to the assessment that has been given to you, you've just begun your work. You might not have even achieved any income. If you object to it, you have to pay 30%. Okay? If you go and file, for example, VAT, once you've issued an invoice, the law is that the following month, by the end of that month, you should file the VAT and make what payment. In certain circumstances, the person who you have issued the invoice to might not have paid. And from where I sit, a lot of them have to go and raise monies from their own. Yes, fine. So, and so already, tax is an issue. Now, our tax laws, we have some kind of concessions. Okay, for example, there are some areas where you go into, let's say, production, agric, if you employ fresh university graduates. Okay, but look at the amount that you stand to gain. And so for me, I think that this whole idea, we need to look at our tax policies and how they affect these SMEs, because without them, we are grinding to a halt. You see, for me, the most important thing is, how are the SMEs registered? Just last year, I lost a friend who is a sole proprietor. There's a major distributor for Unilever Ghana, and this guy passes away. The business is gone down. Okay, so I think that we need to be proactive and really see how the nation starts to gain. with the source of the funding, I think that it is easy. We have the tier 1 and then the tier 2. These are monies that are there, that you and I, our pensions are there. We can fall on them. But the question is that, how have these funds been managed? Look at this software issue that came up, SNIT. And so I think that it's high time that we got serious as a nation. Thank you.
That is why, you mentioned the stuff, that's why I'll be very skeptical in putting my tier 2 and tier 3 money, allowing government to put it there. I'll be very, very skeptical. But it's a conversation we need to have, really. How do we convince investors to be willing to put money in these funds?
Evans,
yes, sir. Yes, sir, please.
Let me react to the tax issue.
Sure.
You see, if we all accept that there should be national, equity fund, then the tax, is a policy. I mean, even you can bear me out how uncertain this government is in terms of where to touch for tax revenues. Keeps on changing and goalposts being shifted here and there. We can have a policy where, the SME tax can be deferred, or it can serve as a pass-through into the fund's yield. So the SME will not necessarily pay funds immediately, but then as the SME grows and the fund grows, we can increase the tax level of the fund, and then that will serve as the benefit to the nation.
Okay. And I just want to quickly, if you are... just a second, I'll let you in. If you're listening to us on my Joy Online, on Joy 99.7 FM, or watching us on the JoyNews channel, you can get in touch with us. Facebook is Daily Graphic Ghana. Twitter is Graphic GH. And the event itself is a hashtag GBSB Breakfast Meetings 2019. And so many ways you can get us. I'll be sharing a few of your thoughts with us shortly. Yes. Yeah. Can you activate this microphone? Is it on?
Hello?
Yes.
Thank you. So I guess what we can also do is, with the national funding, it's not only about giving money to SMEs, but the additional benefit it comes with is the external advisory team. Okay, some of our SMEs may not necessarily need money, especially like a service type SME, but what they need is a professional advice that can help them to navigate the grays. We can talk about the issue of having accountants, having tax practitioners, even insurance brokers. Okay. Now, you face various issues. I was sitting on the table with an SME practitioner, and he was surprised to know that if you wanted to have a conversation with professional firms like us, it was for free. And our meeting, we don't charge for that. But there's always that perception that these guys are expensive. But the truth is, if you are setting up in business, there are certain grays you would need to navigate. Example, our tax laws are not only designed to take money out of you. The tax laws also provide certain benefits to you. But are you taking those benefits as an SME practitioner?
No.
No. You are not taking it because you don't know, and because you are also not interacting with those who know. So I think professional services firms like us also have a duty of care to you, to get closer to you, to let you know what advantages there are, to support you to take it, especially global firms. Now that we are looking at taking advantage of the Africa trade, if you want to understand, let's say, Nigeria, how are you going to do that? Would you be traveling to every single African country, and how many months do you need to be there to understand them? That is where you can connect into global firms, where an hour call can put all this information at your beck and call. If it's about registering businesses, it could be done whilst you are sitting here. That is the vehicle we need to leverage as SMEs to go Africa and go global.
Okay. I'll take microphone. Yes, sir.
Thank you very much. My name is Sam Achiano. I work with IFC. I work in the private equity space on SMEs. So a couple of contributions. I think on the investor front, one of the things you want to look at for this kind of fund is development finance institutions. And the reason is that they have objectives to support these kinds of things, and they will have the kind of patient capital you need to get the fund going. It also will help, I think, in terms of structuring the way the fund operates. Yeah. there are various things that I'm seeing here that I think a technical committee can deal with, and that is how many SMEs can a private equity fund manage effectively? Typically, globally, 15, 30 SMEs is what you can do. So what we're thinking about here should be a fund of funds, where you have an apex fund body that enables funds in different areas. They could specialize in either industries, they could specialize either geographically, to really have hold and be able to support the SME or investees that they are into. In terms of the structure of the fund, we spoke about, the lecturer spoke about the term of the fund. I think these days you have what we call permanent capital vehicles, and I think this is what this kind of thing checks into. You have a 5-year period where investors come in, another 5-year period where another set of investors come in, and then of course you have exit clauses as you go around. A couple of other things are also around the instruments that you want to use. I mean, we've spoken about trying to exit SMEs and investees. It's always very difficult. So what you want to do is to have what we call self-liquidating instruments alongside your equity investment. You're going to have basically your SME operating and beginning to pay back whatever amounts of money you've given them over a period of time, rather than waiting for 3 years to give them, one bullet payment for them to make of about $2 million. That becomes very difficult. So a couple of other things, of course, is around technical assistance. You want to have 2 different pockets, one that focuses on the fund and its investees, and one that focuses on all the ecosystem issues. And that's where, of course, raising donor funding to directly support that would be very, very important. Getting you a seat at the table of Ghana Investment Promotion Council, the Ministry of Finance, all of those things are important to make it work. I think lastly, in summary of all of what the panel has said, the fund cannot be an answer to everyone. And so definitions of SMEs, how much the fund commits to startup businesses, 10, 20%, the minority, and a focus on expanding businesses that have shown a track record that you guys have all spoken about, I think is very important to take from here.
Great. I'll be very interested in hearing from SMEs in the building. I mean, if you're an SME and you are here, I'm curious to hear your view on this. Let's take the microphones to the hands up. Can I hear from the lady, please? The lady, before you go to the gentleman. I'm discriminating in favor of my lady friend. Yes.
Thank you very much. I'm Abel Kwashi, Aquatic World Industries, and also Africa Women in Agribusiness, a member. I'm now in the private sector, but I used to work in a bank for 20 years. And I must say that I share the views of all the panelists, what they are saying. If a startup does not get monitoring, I don't think they will go very far, speaking from experience, because 10 years of my time, I worked with SMEs, the advisory services, the technical assistance that Mr. Matefio talked about. And I think that now we are going more towards incubations and mentorship. Mm-hmm. Because if we don't do that, I don't know whether when one of the panelists gave the statistics why SMEs failed, whether they really looked at why, mismanagement or what. Because if you leave them alone, it's something new that they are going into. So if there's nobody there to monitor, to constantly help them, they will not get very far. And I'm speaking from experience. Even me, who has helped SMEs, I went into my own business, and it's not that easy. It's not simple at all. Mm-hmm. And now I share...
What was your challenge? What was the challenge? Share if you remember.
Funding, initially. We got funding, all right, approval was given. We will give you in tranches. The first tranche came, and this is where if you don't give adequate funding, I mean, it's a failure because I need 200,000 to set everything that I've planned to put in place, and you give me 1/4 of it, and the others do not come.
So they give you 50,000.
50,000. How am I going to proceed? I've set everything in place because the assurance is there that you are going to get the money. Mm. You understand? And then other challenges in the industry. I went into fish farming. And, well, because of that, I switched into processing, which I think is good. I now do fish sausages. But it's not that simple. So everything that we are sharing here, it's the reality on the ground. It's happening. If you go to Uganda, there's a research institute. I think they call it Uganda Industrial Research Institute. It's a big incubation center. And that's where they harbor the youth. We talked of even the space, how much you are paying for it. If you don't have the means, they give you a space. They have machines, miniature ones. They help you develop your product. You can stay there for a year or two. When you get on your feet, you move out, somebody else comes in. And various sectors, even machines that you need to work with. If you don't have the money to bring it, they can assist you to get, they will manufacture the machines for you. So you could see that constantly these youth and the SMEs are being helped to set up their own businesses.
Yeah.
I said I was going to fish sausage. I went to an institution where I know they are into research. And I said, this is what I want to do. I've gone to YouTube. I've learned all that it takes to do it. But I want to know the science because I'm not a science. I'm not a food technologist or that. What the institute told me, that we don't even have the machines. I should bring my own machines and buy my own material so that so that they can help me develop that product. I mean, how can we move far with this?
So therein lies the problem we're talking about.
Yes.
So that's why when you're giving the funding, they're also very skeptical because they know the structures to help you. So they wanted to give you the funding, go and succeed. Let's see before we give you more.
Well, I think that it's a good thing. If I want 100,000 and I'm an SME, sometimes it's not good to give everything to the whole amount. You can stagger it. Take 10,000. This is what you have to do. When you finish, come back. We'll give you, with the promise that you will get it when you go back. Because, I mean, if you give a young person 100,000, he might not be able to know how to manage it.
Yeah.
Some of them are. So with their support, don't leave them alone. With their support, take 10,000. This is what you have to do. Come back. We look at the reports. Yes, we'll give you another one. You go. By the time you finish, the person has learned the experience.
I'm grateful that you shared that thought. I see other hands close by. Can you please give it to the... Yes,
Thank you.
It's on, actually.
Yeah, okay. Thank you very much, Graphic Business and Stanbic Bank. I've seen my name is Adodo Kantamaklo. I'm the Chief Executive Officer of Buswell Group Limited.
Is that an SME?
I am an SME, but actually, if things had gone on correctly, I should have graduated from SME a long time ago.
Long time ago.
Yeah, because I've been in business right from secondary school,
Wow.
1961.
With the same business?
No.
Okay.
And you know, when you develop, when I finished school, I went on straight to business. 74, 75, up to now. Yeah. And it's not difficult at all to raise money. Internationally. Yes.
Internationally or locally?
Internationally.
Okay.
Yeah.
Now we understand.
Yeah, it's not difficult at all. The problem we have in our country is greed. I raised money and I gave it to a bank, you know, because I don't have a capacity to administer the money. I gave it to a bank. Everybody in town, politicians, pastors, businessmen, they say if the money belonged to Busworld, it should have been in Busworld accounts. But what business has Busworld got to do distributing $300 million to 300,000 teachers? $1,000 a piece at a time. I don't have that kind of business. So I told the lender, give it to a bank. And they collapsed the bank. So if you think right now, as we are talking, the first thing for Ghana being, what is it, the Free Trade Center, the first thing is communication, cost of communication. If you are on the border at Aflau and you call Lome, it's like you are calling satellite. If communication is that expensive, then it's difficult to do any business. And I have finance for the ECOWAS region. I'm happy I came to this function to learn that we are gone continent. You know, if you look at China, China should be our beckoning economy. Do you know Chinese economy developed out of Ghana? Does anybody know this? I was at the 1961 Chinese exhibition where Nkrumah's cemetery graveside is. And they did not have anything. They were riding bicycles. And I went to China soon after I finished school. They were all riding bicycles. But they came to Ghana and they learned something. That if you have an idea, you want a business, the government builds the enterprise place for you. And you go and rent it. You don't own it.
Yeah.
You go and rent it. If you can do 5 hours, you use it for 5 hours and quit.
And I guess that's what I've been said about government enabling all this. I'm grateful that you share the thoughts, and I want to bring in other contributors to this. I see a hand.
Just 1 minute. The next one is taxation.
Okay.
We have two types of taxes: the VAT, and the direct tax.
Yeah.
The VAT is taxes from people who are benefiting from free education, free medical health care, and so forth. That should not be reduced. It's not paid by any industry. These are things that, but you should make it, if you want tax freedom, like what the New Yorkers do, fine. But as for the VAT, when I pay and I'm going to hospital and I want to be served, then the company that receives that tax should give it to the government.
Yeah.
That's all. Thank you very much.
I'm grateful. I want to take a few more. And just two more, and I'll wrap up. I guess I see one there. Yes, and I'll come here.
Please, my name is Samuel Oting Jempo, managing director to Samotin Enterprise.
What are you doing?
We do export of aluminum ingots.
Okay, so he's an SME.
We process and we recycle aluminum. And my contribution is that I need support. I am in the position to buy warehouses at the Tema heavy industrial area, comprising of 7 warehouses. And it's costing me almost 18 million Ghana cedis. And I am ready to employ about 1,800 workers, 5 accountants and other workers on other categories. I do export of aluminum and we do processing of cashew. I am partnering a company in Soko since 2006. And I would now like to establish my manufacturing center.